Welcome to Chapter 2 of ETU Free Mastermind CRT Bootcamp. And this chapter 2, we're going to be talking about key levels. We're going to be talking about the most very important key levels, which are the ones you should only care about. Anything else, key levels are just a bullshit key level that you should never watch. You should never learn or anything like that. Why are these the most important key levels? Because they're the most efficient and they're the most high probability of a key level, right? As you know, ICT makes a bunch of key levels as of right now, makes hella, and it's ruining people's life because of that. Because he's part of the system. You really look into close to it, really look deep into it. He's part of the system at the moment right now. We're gonna be talking about 5 specific key levels. One is fair value gap, and there are types of fair value gap. A IVG, so a reversible fair value gap, where fair value is respected and it becomes a support/resistance. A break of block, a buy side/sell side liquidity, rejection block, and last and personally CISD. You could call it a auto block or you could call it whatever, right? But CISD, that's the last one we're talking about, right? Let's start off with the fair value gap. It's a 3-candle sequence, right? The first candle, the second candle, and the third candle. One thing is the simplest thing I could say. If the wick of the one candle and the third candle cross each other, so that means this candle is coming all down here, this candle coming all up here, that's not a fair value gap. This right here, 1 candle, 2 candle, 3 candle, that is not a fair value gap inside of there. So that you disregard that as a fair value gap. You will regard this as a fair value gap right over here. 1 candle, 2 candle, 3 candle. These 2 candles, 1 and 3, are not going against the wicks, or not, going against each other, right? They're not going like this, right? So leaving a gap. This is a fair value gap. Right over here is another fair value gap. This fair value gap is considered a reversal fair value gap because it was first of all a bullish fair value gap where the market do falls below it, making it a reversal fair value gap. Usually market like to retest it, sometimes no, sometimes yes. But in this case, this would be another fair value gap right over here to the downside, right? Very easy and simple. And for the IVG, you're looking at the same concept. You're looking for a gap to be there, but you're looking for another candle to, close below it. Disrespecting the fair value gap, eventually the disrespect fair value gap, you drag it across and use it as a support/resistance. If you're bearish, you use it as a resistance. If you're support, if you're looking for buys, you're looking to use that IVG as a support to support price at the upside. And another thing with IVG says fair value gaps, they help you with the kindish. It's not a proficient. It's not better than typical range. It's not better than ranges, but it does kind of ish help you with where market should be going to, right? In this case, when the market presses out this liquidity, market is always going to go to the downside, right? It's that easy, right? It just helps you. Once the fair value gets inversed, it's kind of to tell you where the market wants to go to, right? Because it respected the fair value gap, right? Which is not a really high efficient model to determine where the market should be going next, where the market journal should be going next. But it just give you a stronger bias to your thing because all the fair value is respected, the journal should be bullish, right? But it won't give you the exact way where the market should be, right? And that's what we're gonna get later on chapter. We're gonna be talking about ranges and all those good shit, right? That's that. And that's the mechanics of it. The next one we're gonna be talking about rejection block. A rejection block is basically a sell side liquidity, sell buy side liquidity, right? But all you're looking for is the wicks because markets sometimes will not purge out the liquidity here. Sometimes market will not go below it. In this case, it's still valid. This sell side liquidity is still valid. How is this sell side? Not sell side liquidity. This rejection block is somehow still valid because yes, it did get a wick below there, right? But it did not close below there, so it's still considered to be valid. A rejection block, all you're doing is looking for a buy side or a sell side or a swing high, swing low. You're taking it from the body to the wick and getting a box and just taking it across to where you're going to see market retrace, market reflect out of it. And this is another case where the market did not purge out the buy side liquidity, but tapped the 50%. And from the rejection block, as you know, the 50% is a threshold. You can see from the body to the wick, the buy side liquidity, you're not taking from this wick, you're taking from this because it's a bigger wick, right? You go to the wick, market retest the wick, and reset the 50% of the threshold of the rejection block and reflect out of it, right? Now that's that. It's that simple. Buy side liquidity and a sell side liquidity, right? Now let's talk about a sell side liquidity and a buy side liquidity. A sell side liquidity is just a bearish bullish candle. Every bearish bullish candle is a sell side liquidity. Every swing low is a swing sell side liquidity. Every bullish bearish candle is like this. Bullish bearish candle is a what? Is a bullish is a buy side liquidity. Every swing high is a buy side liquidity, right? So that means there's liquidity around here. That means there's sell side orders here, right? And there's a buy side orders here, right? You can see, brush it out, went above, right? Brush the high out, and guess what? It still close. It still went down. I mean, this is still considered to be respected because order flow is bearish. Market constantly rejecting highs, breaking lows. Market rejected its high, and you're reflecting out of it, right? You can see broke through this low, right? It's simple as that, right? And that buy side liquidity could go low over here. Buy side liquidity gets purged, reflection out of it. Sell side liquidity gets completely ran through. In this case, it will not be respected because the overall order flow is bearish. So that means low should be respected, high should get respected. Right? And this is right here. It's a swing high. This right over here is a swing. Swing low, swing high, right? So that's a buy side liquidity, sell side liquidity as well, right? Now, let's talk about our other one, CISD or order block. You can call it whatever, just branding name. These are a very important concept that is always used because a order block of CISD or institutional PDRAs, right? They're institutional. That means banks are accumulating, right? When there's an order block CISD, you hear the famous quote where it says, every time there's an order block, that means the banks, institutional traders are accumulating. I mean, big monies are accumulating, right? That means smart money is in play. And for the order block, I will not be teaching you the lower probability of an order block. I will be only teaching you the higher probability of an order block, right? The fair value gaps, the breakup block, the buy side liquidity, sell side liquidity, they don't have a probability. They're just alone by itself, right? But order blocks has different types, and there are lower probability and higher probability of an order block, right? And we're only going to be talking about the higher probability of an order block. A order block must fill liquidity. That means it must go fill another order block, and that order block that's getting filled, that order block must fill another. That order block either purchases liquidity or fills another, or fills a fair value gap, or or it fills another order block. That order block fills for liquidity, right? Or fills or purchases liquidity, right? In this case, those are the only two high probability of order block, right? An order block that either purges liquidity, that means it purging a buy side liquidity or sell side liquidity, or it fills liquidity. In this case, you can see this order block that's getting created over here is a purged liquidity, one of the mechanics. So this order block is already considered higher probability. You as well filled liquidity, which is a high time frame fair value gap. So you filled liquidity and you purged liquidity. So both of the mechanics are there. If both of them are there, okay, great, that's good, right? If one of them is there, it's great, it's good because it's still a higher probability, right? And the 50% of the order block is considered a threshold where market reflect out of, right? Market will reflect out of this order block and go down here. Out of the 50% is considered a threshold where the market will get a reaction out of. If it's an actual good order block, market will get reaction out of it, go back down, right? And the only time you should care about the 50% of the threshold, and the only time you should care about the threshold of an order block is when you already have, is when you have a big bulky candle. In this case, you see the wicks are very small compared to the body. The big body is overtaking the wicks. You would take the 50% threshold as your way of to entering the market because you give you more RR, right? In this case, you would have not entered the wick nor the body. You would have entered the threshold because the body is way too big, right? So the big bulky candle, the body is way too big. So you'll be using the threshold of this big ass bulky candle as your way of entering the trade. Use the threshold at the 50% mark, basically the threshold, basically 50% mark is your way to enter the downside, giving you more RR to the trade that you're permanent take. Because if you're taking the same trade like this, let's just say you take it from the wick, stop over there, same sell stop, right? You're going from this low. Let's just say going to this low, right? Which is a very important low, right? 1.7 RR. You take it from the body, 1.74 RR, right? Not difference, right? Take it from the wick, from threshold, 8.6 RR, right? 2.86 RR, right? Huge difference. That's why it matters. And there's scenarios for the order block as well. There are plenty of scenarios. I will, if you guys want me to make a whole chapter for that, I will. But I've already uploaded a video where I talked about it. CISD, change the state of delivery, understanding reversals, manipulations, understanding all those open high low close concept. And he talks about the scenarios about this as well, right? He talks about scenarios of the order block, when to use the body, when to use the threshold, when to use the wick, and all those mechanics and protocols to it, right? And if you don't have an order block that does not meet either of these criteria, which is either a purge of a liquidity or a fill of a liquidity, disregard that as an order block. If you would have counted this auto block, you would have got a stop loss. Eventually, you're not that dumb to count this as an auto block, right? Because you're in a bigger auto block. Why would you want to count this as an auto block, right? And as a smart person, what would you want to enter around here or right outside of the auto block, right? Because you get less RR, so you want to enter out the threshold. So this entry right over here, this auto block got respected. Yes, it did fill another liquidity, but there are definitely probabilities. Some of them will be good. Even the best trade, you would have a loss. Even the worst trade you might ever have, might be a win, right? And it's all based on the probabilities. Nothing has a 100% win rate, right? Never come join ETU, Mastermind, CRT Bootcamp, thinking everything I'm gonna teach is gonna be 100% win rate. No. Losses are part of the game. My win rate is a 40 to 50% win rate. I don't even have a 70% win rate. My win rate is really low, but my RR is really high, right? So I'm making more than my losses. And let's stop bragging and let's get over to our last important concept, which is a breaker block. Breaker block has to meet this criteria. If it does not meet one of these criteria, it only has one criteria. If it does not meet this criteria, it is not an auto block. It's not a breaker block. Don't trade random breaker blocks. Don't trade random things as a breaker block. People would treat this as a breaker block. Okay, you got overall reflection. You're drawing liquidities over here. Just say back over here to the high. Stop loss hit, right? Why was this not a breaker block? This breaker block never not filled liquidity. It never purged liquidity. For a breaker block to be valid, it has to do one and one only criteria. It has to purge liquidity. If it's not purged liquidity, disregard it as a breaker block. Because the lower probability you don't want. You want to, as I said, I'm only teaching you guys the highest probability, and this is what I'm here for, right? As your gurus will teach you guys lower probabilities, higher probabilities, make you lose a lot. My case, only higher probability, right? And ETU, only higher probabilities to help you succeed even faster. You would have had a stop loss here because you did not wait for a fill of liquidity, did not wait for a purge of liquidity. That's why you got a stop loss. And eventually you can see this breaker block got reused to go to the downside, right? And it was probably saying, didn't this auto block didn't this breaker block get used to go to the downside? No. This is what caused the market to go to the downside, because this breaker block purged liquidity. So this was considered as a high probability of a breaker block, low probability of a breaker block. If you would have entered out of this breaker block, because people do like to use this, right? Right when it's get disrespected, they like to use that as a breaker block and use it to go to the downside, right? And guess what? What if your entry would have been here around here? You would have had so many losses, right? Look at the pip difference. You're entering here. Let's just say you're putting yourself up above this breaker block, which is right over here, right? Compare that to this. right? You're going for the same goal. Let's just say your same goal is to the downside to this whatever, right? Let's just say this sell side liquidity right over here, right? The sell side liquidity right over here. 1.8 RR compared to a 5 RR, right? Huge difference. And this is a lower probability, higher probability. So that's why it matters so much. You can see breakup block got tapped multiple times here before going down. I personally don't use breakup block too much because when I used it at the first time, I messed up a lot. I didn't know the actual mechanics, but I do use it, right? I use it often. If I do see setup, I use it, but it's rarely in the market. It barely shows, but it makes a higher probability, right? This breakup block right over here was a higher probability. How was this breakup block higher probability? Because this breakup block bridge liquidity, right? Closing below it. Yes, you can say, well, he closed above it, right? Isn't that invalidated? Didn't close above it. Wick does the damage, body tells the story. Have you ever heard that quote before? Well, we have, right? Wick does the damage, body tells the story. Wicking doing the damage to the upside, body telling the story, right? You're entering, it would have not been that dumb to enter out this breakup block, you'd have entered out the threshold, but get a better RR, right? Putting yourself over here is way too risky. So you have to think about it, use your brain a little bit, right? But this is chapter 2 of ETU's free Mastermind CRT Bootcamp. Thank you for watching. I'll see you guys in chapter 3. Chapter 2 is very important. Chapter 2 is very important, so make sure you guys keep on rewatching if you don't get it. It's the most basic thing. Very easy and simple to understand. I've explained it briefly and very simply. So thank you for watching, and I'll see you guys in the next chapter.